Hello viewers, welcome to my channel. I'm Hasham. Now I'm going to start the problems on profits and gains of business and profession. Last video I have explained you in detail regarding what are the provisions, how to compute the income from business, how to compute the profits and gains of business and profession according to the provisions of Income Tax Act 1961. Hope my regular viewers have already watched that video, got a command on how to compute the income. If you have not watched, I suggest you to go to the playlist of my channel. Select the topic Income Tax 1. Select the subject Income Tax 1 and the topic Profits and Gains of Business and Profession. Watch that video, then only you can be able to understand the problems. Without that, it will be difficult for you to understand the problems on profits and gains of business and profession. Apart from that, I have already uploaded the video on Introduction to Income Tax Act 1961 for the current year provisions, current assessment year 2021, and how to compute income from salary, income from house property. So many videos I have uploaded regarding the problems and solutions. So watch those videos, get a good command on the subject, confidence on the subject. Now I'm going to start the problems on PBGP, that is profits and gains of business and profession. Before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready before watching the problem. Now see the first problem. Sri Chandramohan is the owner of a business. From the following is the profit and loss account for the previous year 2019-20. Compute his income from business for the current assessment year 2021. The profit and loss account is given. The net profit as per profit and loss account is 55,029. 55,029. This is the profit as per P&L account. But this P&L account is prepared by the assessee. Now we have to apply the income tax provision and find out how much is the business income as per the law, as per the Income Tax Act. Because in the profit and loss account which is prepared by assessee, there are many expenditure which he has debited according to the accounting principles. But those deduction, those expenditure may not be allowed by Income Tax Act. And the expenditure which is not allowed by Income Tax Act and already debited in P&L account are called inadmissible expenses. Now, profit is given. Additional information: during the previous year, due to negligence of an employee, goods worth ₹400 were damaged fully and there is no insurance for it. So additional information is given. 400 rupees worth of goods were destroyed due to negligence of the employee. Income Tax Act says, when due to negligence of the employee or dishonesty of the employee, if loss is occurred to the business, that's a revenue loss. That's a normal loss, expected loss. So this loss is allowed as deduction according to the provisions of income tax rules. So we will give this deduction. Loss due to negligence of employee, it is allowed. Now, how to compute income from business? So the heading will be Computation of Income from Business of Sri Chandramohan for the assessment year 2021. First of all, you make the format. First we take net profit as per profit and loss account 55,029. The profit and loss account is given in the problem. The net profit, last item net profit I have taken 55,020. To this we have to add inadmissible expenses. What do you mean by inadmissible? The expenses which are debited to profit and loss account, which are already deducted in P&L account, but Income Tax Act will not allow. Income Tax Act will not allow that expenditure. So inadmissible expenditure means expenditure which are not allowed by Income Tax Act, but already debited in P&L account, profit and loss account. Now those expenditure which is already debited will be added back. Now one by one we'll see. To salary to staff. Salary paid to staff is allowed as deduction. Bonus given to staff allowed as deduction. Proprietor's salary not allowed as deduction. The proprietor's salary is a notional expenditure, imaginary expenditure. The proprietor will get the profit of the business. He is not entitled for salary. The proprietor's salary is a notional expenditure not allowed as deduction according to the provisions of income tax rules. Already in theory video I explained 1800. Then rent of the building allowed. Interest on loan. Here it is given interest on loan for personal 500, for business 700, total 1200. So interest on loan is given for personal loan as well as business loan. Income Tax Act says when a loan is taken by the business and interest is paid on that loan, it will be allowed. When a loan is taken for personal purpose and interest is paid from the business, it is not allowed as deduction because it's a personal expenditure. When the owner has taken a loan for personal purpose, he should pay the interest from his own pocket. The expenditure should not be of the business. So interest paid on personal loan is disallowed. Already it is debited to P&L account. Now it is disallowed. Add back. So interest on loan personal 500. Next one, printing and stationery allowed as deduction. Income tax. Profit and loss account debit side income tax. It's a personal tax. It should be paid by the owner from his own pocket. It should not be paid by the business. So income tax is a personal tax. Disallow. Add back income tax. Next one, cost of new telephone. So according to the provisions of Income Tax Act, cost of new telephone is allowed as deduction. Telephone bill allowed as deduction. Drawings. Drawings means when the owner has withdrawn from the business for personal use. It is called drawings. Drawing is not an expenditure. It is the amount withdrawn by the owner from the business for personal use. The drawings are disallowed. Next, repairs to building. Now it is given repairs to building, current repairs, capital expenditure. Current repair 600, capital repair 1500, capital expenditure 3200, total 5300. Now one point is, when an assessee is running the business in a rented premises, the Income Tax Act says rent paid will be allowed. Apart from that, repairs of the building. Repairs of the building will be allowed as deduction only if there is agreement between the owner and the tenant. That repair expenditure will be paid by the tenant. In this case, it is given rent of the building. So rented building is there, repairs are given. So we assume that there is an agreement between the owner and the assessee regarding repairs. So repairs paid on building will be allowed as deduction. The current repairs and capital repairs both are allowed as deduction. But capital expenditure, not allowed. The capital expenditure will not be allowed as deduction, disallowed. But Income Tax Act says on capital expenditure, depreciation will be allowed. Capital expenditure incurred on building, that means one room is extended, one floor is added, so it increases the earning capacity of the business. So capital expenditure will be added to the block of assets. Depreciation will be allowed at 10%, assuming it's a non-residential building. So 3,200 rupees capital expenditure debited to profit and loss account, disallowed. So first of all, 3,200 repairs to building, capital expenditure, disallowed. Later on, depreciation will be given on this 3,200. Provision for doubtful debts. Provision for doubtful debts is an anticipatory loss. It is not actual loss. The loss which may occur. The Income Tax Act says anticipatory losses are not allowed. Actual losses may be allowed. Revenue losses, if actual loss is there, it is allowed. But provision for doubtful debts, not allowed. So provision for doubtful debts, disallowed. Provision for warranties, it is allowed. It's a business provision. Then depreciation, nothing is given in the adjustment. So depreciation debited to P&L account, we assume that it is according to income tax rules. The depreciation amount is according to income tax rules. It is allowed. If it is disallowed, we have to add back. If it is allowed, nothing should be done. So debit side we have taken. Now we have taken all the inadmissible items. Take the total of inadmissible items 7796. Add up 55,029 plus 7796, 62,825. From this we deduct incomes taxable separately. In the profit and loss account, credit side we will have incomes. We have to see if it is a business income, it's okay, no problem at all. If it is not a business income, we should deduct because we are computing business income. If any income is there which is not a business income, we should deduct. Now here gross profit is a business income, but interest on bank deposit, interest on bank deposit is taxable under income from other sources. Interest on bank deposit is taxable under income from other sources. It is not a business income. So we deduct. Interest on bank deposit, you deduct it. Subtract. So 62,825 minus 1510, 61,350. Apart from that, by sale of waste papers. Some waste papers are there that are sold and proceeds are received. That's a normal business income. Because it's a routine activity. Sometime or the other, some waste paper will be collected, that will be sold off as a scrap. So it's a routine activity. So this sale of waste paper is a revenue business income. So nothing should be done. If it is not a business income, we will deduct. If it's a business income, nothing should be done. Now 61,315, that is brought up. Less deductions allowed as per IT rules. Some deductions are there which are given by Income Tax Act but not debited to profit and loss account. The expenditure which is allowed by Income Tax Act but not debited to profit and loss account, now we deduct. The first one, depreciation on capital expenditure on building. In the profit and loss account, capital expenditure is 3,200. We have disallowed. We have disallowed 3,200. We have added back. But Income Tax Act says capital expenditure on building is a part of fixed asset. It's a part of building. So on building, depreciation will be allowed. So this 3,200, 10% depreciation is there on building. So 10% of 3,200, 320. Then goods damaged due to negligence of employee. Last adjustment it is given. Some goods are damaged due to negligence of the employee. Income Tax Act says it's a revenue loss. It will be allowed as deduction. It is not debited to P&L account. It is not debited to profit and loss account. Now it is allowed. So deduct. So these two expenditure are not debited to profit and loss account. Now we are deducting because it is allowed as per IT rules. So goods damaged due to negligence of employee 400. Take the total 720. Subtract 720. 61,315 minus 720, 60,595. 60,595 is income from business according to Income Tax Act. That's it. In working note, it is better to give the explanation. In examination, you should write at least few working notes regarding the items, how you have treated, why you have treated. Proprietor's salary is a notional expenditure, so not allowed. Already I told you, I explained you, but it is better to write in working notes. Proprietor's salary. Salary to staff is allowed, but salary to proprietor is imaginary expenditure, not a real expenditure. Proprietor is not allowed salary. He will get the profit from the business. Interest on personal loan is not a business expenditure, so disallowed. Just now I told you. Business loan is taken, interest is allowed. If personal loan is taken, interest is not allowed. The SSC is running a business from rented building. So assuming that repairs has to be borne by the SSC, so current and capital repairs are allowed. Whereas capital expenditure is disallowed. Just now I told. Current repair and capital repairs are allowed as deduction, assuming that there is an agreement between the SSC and the owner that the repairs should be borne by the SSC, tenant. So it is allowed. But capital expenditure is not allowed. Whereas capital expenditure is disallowed, but SSC can get 10% depreciation on capital expenditure on building as it is a non-residential building. The building is a non-residential building, so 10% depreciation on capital expenditure is allowed. 3,200, 10%, 320. Next one is cost of new telephone. Cost of telephone is allowed as reduction. Provision for doubtful debts is an anticipatory loss. It is not actual loss. It is expected loss. Disallowed. Whereas provision for warranty is allowed as reduction. Then interest on bank deposit is taxable under income from other sources. It is not a business income, so we have deducted. Next is sale of waste paper is a business income. The credit side of P&L account, it is given sale of waste paper. It is a business income. Nothing should be done. Loss due to negligence or dishonesty of income will be allowed as reduction because it's a revenue loss. When employees are working in the business, there is a possibility there may be negligence or there may be dishonesty Income tax taxes, it is allowed. Income tax is a personal tax, so disallowed. Last one, drawing is not an expenditure of business, so disallowed. So this is the end of problem number 1. First problem we have completed on computing the income from business. Come on, now we'll start the next problem. Problem number 2. Following is the profit and loss account of Mr. Suresh. Compute income from business and calculate tax liability for the current assessment year. So here we are given the profit and loss account. So what is the net profit as per P&L account? 65,400. So net profit as per profit and loss account 65,400. Now see here, computation of income from business of Mr. Suresh for the assessment year 2021. Net profit as per profit and loss account 65,400 given last item in profit and loss account. Now debit side. Now see the debit side, which are the items which are disallowed by Income Tax Act. The items which are disallowed by Income Tax Act are called inadmissible expenses. That we will add back. So add back inadmissible expenses, meaning those expenses which are debited to P&L account but Income Tax Act has not allowed. Now see the debit side. Salary 14,000, add outstanding salary 800, total 14,800. Income Tax Act says if the SSC follows mercantile system of accounting, then all expenditure incurred during the year will be taken, whether paid or outstanding. Whether it is paid or outstanding due, it will be allowed as reduction. So here we assume that this SSC is following mercantile system, so outstanding salary will also be allowed as deduction. So nothing, no adjustment required. It is allowed. Then telephone expenses allowed, rent 1800 allowed, legal expenses. Legal expenses are given for protecting the business 3,000, for personal suit 900. So legal expenses are paid for protecting the business. It is allowed. It is the responsibility of the SSC to protect the business. So if any legal expenses are incurred to protect the business, it is a business expenditure allowed. But for personal suit, legal expense incurred for personal suit, it's a personal expenditure. It is debited to P&L account, not allowed, not related to business. So you can see legal expenses for personal suit 900 disallowed. So we are going to add back. Then motor car expenses allowed. But motor car expenses, one adjustment is given. 50% use of motor car is attributable to business purpose. That means motor car is used 50% for business, 50% for personal. So 50% motor car is used for personal purpose. So disallowed. So how much motor car expense debited to profit and loss account? 4,400. Out of 4,400, 2,200 is for business and remaining 2,200 is for personal. Disallowed. Personal will be disallowed. So motor car expenses personal, 50% of 4,400, 2,200 disallowed. Next item, income tax. Already in the previous problem I told you income tax is a personal tax, not allowed. Add back. Then birthday party expenses. Birthday party is a personal event. So birthday party expenses should be paid by the SSC from his own pocket. It is not a business expenditure. Disallowed. Then annual day expenses of shop, it is allowed. Annual day expenses of the shop is allowed. Goods and services tax, GST. Goods and services tax is a business tax, business expenditure. It is allowed. Then it is allowed. We should not take it here. Bad debts. Bad debts will be allowed. Bad debts are allowed. It's a revenue loss, assuming that the SSC satisfies all the conditions. Provision for doubtful debts not allowed. It is anticipatory loss. So provision for bad debts disallowed. Then depreciation. Regarding depreciation debited to P&L account 1,600 and depreciation is given in adjustment. Depreciation allowed as per IT rules 5,600. The P&L account depreciation debited is not according to IT Act. We'll add back. The depreciation which is debited to profit and loss account is not as per IT Act. So we add back depreciation 1,600. Later on, we will give the depreciation as per IT rules 5,600. Afterwards, we'll give the depreciation. The first depreciation debited to P&L account will be disallowed. Add back. Later on, depreciation as per IT rules will be allowed. So here depreciation. we have seen all the debit items. Debit items, we have seen all the items. These are the inadmissible items. Disallowed. Add back. The total of this 6,780. Add back. So 65,400 plus 6,780. 72,180. Now less. Incomes taxable separately. Some incomes are credited to profit and loss account, but these incomes are not taxable under business income. The incomes are taxable separately. Now we'll see which are the incomes. Gross profit, it's a business income. Rent, sublet. Actually, rent paid and also sublet rent is there. Debit side you can see rent paid 1,800. Credit side you can see rent, by rent, subletting 200. That means this SSC has taken a premises on rent and he has paid 1,800 rupees to the landlord. Later on, a portion of the premises he has sublet and he has received the rent 200. So Income Tax Act says when subletting rent is received, this 200 rupees will be deducted from rent paid. Rent paid is 1,800 and subletting rent received is 200. In that case, 1,800 minus 200, 1,600 rent will be up. Only 1,600 rent will be allowed. 200 rent will not be allowed. So 200 rent will be disallowed. Add back. Then profit on sale of old machinery. Profit on sale of machinery is a short-term capital gain. It's not a business income. Remember this point. According to the provisions of Income Tax Act, profit on sale of machinery is a short-term capital gain. So we deduct. Incomes taxable. Profit on sale of machinery 6,800. Apart from that, profit on sale of empty bags. Profit on sale of empty bags. It's a business income. Nothing should be done. If it is not a business income, we deduct. If it is a business income, nothing should be done. Next one is bad debts recovered. Allowed earlier. Bad debts recovered. Actually, some bad debts were allowed as deduction in the previous years. One customer was there some 2, 3 years, 5 years back. One customer was there from whom 500 rupees was recoverable, but he has not paid. So we have treated that as bad debts, and income tax also has allowed that as bad debts in the previous year. Now that customer has returned back that bad debts, it is called bad debts recovered. So Income Tax Act says if bad debts are allowed as deduction earlier, now if it is recovered, it's a business income. It's a business income. If the bad debts are allowed as deduction earlier, now the bad debts are recovered, it's a business income, it is taxable. If it is not allowed earlier, if it was disallowed earlier, now bad debts are recovered, it is not taxable. It is not taxable. So we have to see whether it is allowed or disallowed. If it is allowed earlier, it's a business income. Nothing should be done. So this 500 rupees is a business income. Already it has appeared in the net profit. That's all. So we have deducted. Now deduct 6,800, 65,300. Now deductions allowed as per IT rules. So in the adjustment it is given depreciation allowed as per IT rules 5,600. 5,000. This is the depreciation as per IT rules. Apart from that, one more adjustment. Part of the sales is export sales. Due to foreign exchange rate fluctuation, loss suffered is 2,100. This SSC is selling the goods, is exporting the goods also to other countries, and due to foreign exchange rate fluctuation, some loss it occurred. Income Tax Act says loss occurring on foreign exchange rate fluctuation. It's a revenue loss. It's allowed as deduction. It is not debited to P&L account. It is not debited to profit and loss account, but it is allowed by Income Tax Act. So we are deducting here. 2,100, total 7,700. Subtract 65,380 minus 7,700, 57,680. Now last one, excess rent debited to P&L account. In profit and loss account, 1,800 rent was debited. But Income Tax Act says already he has recovered 200 rupees bad debt, rent from subletting. Rent from subletting he has received 200. So only 1,600 is allowed. But debited to P&L account 1,800. So how much rent will be disallowed? 200 rent will be disallowed. So that will be added. So income from business will be 57,880. This is income from business. Now computation of total income, because it is asking you to find out the tax liability. So we calculate the total income. Now he is having three types of incomes. Income from business 57,880. Short-term capital gain. Gain arising on sale of machinery. Gain arising on sale of machinery is a short-term capital gain. It is taxable at a slab system along with other incomes. Then income from other sources given in the last line of the problem, 11,120. The total income is 75,800. This is the total income. Now computation of tax liability. The tax liability is nil because the total income is below the basic exemption limit of 2,50,000. For individuals, the basic exemption limit is 2,50,000 for non-senior citizen. Assuming that SSC is a non-senior, so basic exemption limit 2,50,000. The income is below 2,50,000, so tax liability is nil. This is the complete, solution of this problem. Along with, you have to write some working notes. Whatever items we have allowed as deduction, we have disallowed. So on those points, it is better to give the working note. First working note, it is assumed that SSC follows mercantile system of accounting. So outstanding salary is allowed as deduction. Two types of accounting are there: mercantile system, cash system. If cash system of accounting is followed, only cash paid, salary paid will be allowed, outstanding salary not allowed. But mercantile system, even paid, outstanding, both are allowed. Nothing is given in the problem, so we assume that the SSC follows mercantile system, so outstanding salary allowed as deduction, nothing to be done. Then legal expense on personal suit is not a business expenditure. Then half of the motor car expense are disallowed since it's personal. Then income tax, birthday party expense are disallowed, whereas the annual day expenses are allowed as expenditure, allows a deduction. Goods and services tax is allowed as deduction. Provision for doubtful debts disallowed, whereas bad debts are allowed. Then depreciation debited to P&L account is disallowed, and depreciation as per IT rules is allowed. The P&L account depreciation, whatever it is debited, that is added back, and later on as per IT rules it will be deducted. Next one, rent from sublet 200 will be deducted from rent paid 1800. Therefore 1600 only will be allowed. Also, as rupees 1800 debited, so we add back 200 rupees to net profit. Here 200 rupees we have added back. Next is profit on sale of machinery is always a short-term capital gain. Profit on sale of empty bags is a business income. Nothing to be done. Bad debts recovered is a business income as it was allowed earlier. Just now I told, bad debts recovered we have to see if it is allowed earlier, then it's a business income. Nothing should be done. If it is disallowed earlier, it is not a business income, we would have deducted. If in the problem it is given disallowed earlier, then in that case, bad debts recovered is not a business income. We would have deducted here, right? But in our present problem, it was allowed earlier, so it's a business income. Loss due to foreign exchange rate fluctuation is a revenue loss, so it is allowed as deduction. These are the working notes. It is better to write your examination. So we have completed two problems. After watching these two problems, definitely you will get some idea about how to compute the income from business according to the provisions of IT Act. I have explained all these points. If you watch from beginning till end, definitely you will get a lot of confidence, a lot of command on the subject of income tax. So if you are satisfied with my lecture, give a like to the video, share it in your groups, in your friends, give your comments regarding this lecture, and lastly, don't forget to subscribe my channel. We'll do the next problem in the next video.